Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, July 29th, 2013. Well, a continuation of the trend to the upside today. In the previous candles trading, we saw a change of trend with the candle making a higher high and a higher low, establishing that trend in the first time frame to the upside. Prior to that, we had the market making a lower high and a lower low, and finding support down around the 1309 level. For that previous day's trading, we had a doji type candle, and it's a candle of quite a bit of indecision, where we see the market opening and closing around the same level, and did suggest that there was a potential for the trend to change. But with today's trading, we haven't seen that trend change, but we have seen in bar chart terms an inside day, and that's a day where we have a candle or a bar with a lower high but a higher low, and it doesn't confirm continuation of the trend to the upside, but that prior trend remains in force, but it doesn't change the trend to the downside, so that's why it's a very indecisive trading day. It actually tells us that the buyers weren't strong enough to take out the previous high, and that raises doubt about continuation of the trend to the upside, but by the same token, the sellers weren't strong enough to take out the previous low. This candle that we've had finalised trading today, this black body candle, is a spinning top type candle. We do have a fairly large, relatively large size to the body compared to the previous day's trading, which was the doji candle, where we had no body, and does suggest that the sellers have found some momentum. So the black body suggests that the sellers have made some net bearish progress on the day between the open and the close. But looking at where they've managed to close this market, the sellers have closed with a moderate amount of control, not strong control. They lost commitment as they were trading down below the 1329 level, but we're able to close the market down below there. So that does suggest that there is a possibility of the market trading lower. But if we do trade lower, we have very, very solid support down around this 1309 level. This indecision in this market is not something that is a surprise. If we look at this market, we are bound by the very solid overhead resistance at the bottom of the cloud, and also this strong level around this 1309 level. And what we're actually seeing here is the peaks and troughs in this congestion area that's forming between this strong resistance and strong support. It's forming a small pennant type pattern, and drawing the boundaries on this congestion area, we see the convergence of the peaks and troughs. Pennants tend to form very quickly. They're relatively small, and in relation to the prior trend leading into it, it's not relatively small, it's a little bit larger. But we don't have a strong trend leading into this pattern. If we consider the trend having developed down around this level, around the 1271 level, rather than the breakout from above this wedge, then that would give us more confidence in this being a typical pennant pattern. They tend to be continuation patterns, and you use the measured move, so it's the length of the trend moving into the pattern projected from the breakout. So that would possibly give us a target up around the top of the cloud here, but it's highly unlikely that we will see a solid bullish breakout up above the pennant pattern that's being formed. And the reason for that is that we have the cloud very close by to where the market's trading at the moment, and a very thick amount of cloud extending all the way up to around the 1417 level, and in between there we have the round number 1400. So very, very solid resistance above where this market's trading. For the past two consecutive trading days, we've seen the bottom of the cloud around 1338 acting as resistance to this market. Now, pennants can be reversal patterns as well. They tend to be continuation patterns. That's most likely that the trend will resolve itself in the same direction that as the lead-in into the congestion area. But if we do have a reversal here, the target will be the width of this pattern projected down, so it would give us a target probably roughly down around the 1292 level. So that is a possibility, and considering that the market is trading down below the cloud, it is more likely that we would see a breakout down below the bottom barrier of the small congestion area that's formed, rather than to the upside. But we can't preempt the market. We're talking about probabilities here, and based on the evidence that we're seeing here, it is more likely that the breakout will be to the downside, but we still could see that breakout to the upside. And what we need to do as traders is react to the market as we see these breakouts occur. Now, in terms of the Fibonacci extension, and now that this market is in a first time frame uptrend, we're examining the relationship of the first time frame uptrend to the previous time the market was trending up. And for the previous day's trading, we saw the market rejected from the 23.6% level. The market hasn't traded to that level. It's roughly around the bottom of the cloud, strengthening the resistance around that area. So a very solid barrier to this market moving forward. And with this spinning top type candle, where the sellers have taken control, albeit a weak amount of control, it does suggest that there is potential for a change of trend to the downside. In terms of the Fibonacci retracement, here we've seen the market interacting for 3 consecutive trading days with the area above the 61.8% level and failing to close above there for the 3 consecutive trading days. And today we've seen some rejection coming into the market, and this is suggesting that there is potential for a change of trend. For the second consecutive day, we've also seen the high extend roughly up to about the 78.6% level and be rejected from there. So a possibility of a change of trend to the downside. In terms of Ichimoku, obviously a bearish market in the long-term time frame, with the market trading down below the cloud, and as I've already mentioned, the cloud has acted as a strong barrier for the past 2 consecutive trading days to this market trading higher, and a good possibility that it will continue to act as a strong barrier to any upward price movement. The market's also trading above the market is trading above the Kijun-sen and the Tenkan-sen, the pink line and the green line, and that's suggesting the market is bullish in the medium and fast-term time frames. So that's suggesting that we could see a breakout to the upside, but with this strong barrier overhead, it's more likely that the market will test lower. Now, the 1309 level of support is strengthened by the Tenkan-sen trading in that area, and it has been trading around there for the past 3 trading days and strengthening that area, so it will require some solid downside momentum for this market to break out to the downside. But we also have the solid support at around number 1300 just below there as well. So there was some serious doubt about whether this market will be able to reach a target which was just below that 1300 level. If we do see bearish activity and a bearish breakout down below that 1300 level, we could see the market quickly trading down to 1266, and that's a strong area of support with the Kijun-sen trading down around there as well. Now, looking at the Kijun-sen, that is pointing flat, and it's reflecting this sideways movement, this congestion we're seeing in the market. But we haven't seen the trend change at the moment technically, so there is a good possibility that we could see that change of trend to the downside with a lower high and lower low. And while that Kijun-sen is pointing flat, so let's watch the low of the previous candle for that to occur. But really at the moment we need resolution of this market trading out of this congestion area that we're seeing, and as I've suggested, it's more likely that it will be to the downside, but very, very solid resistance overhead and solid support down below.